Hi, and welcome to the May 2017 Downtown Pittsburgh IBD Meetup. My name is Eric Rossi. I'm the co-organizer of this meetup group. And on this title page, you'll see a link to our meetup group's homepage. So if you found this video on YouTube and you want to learn more about the meetup group or join and become a member, which just requires a free meetup membership, then you can use this link. So this group's mission statement is to educate individual investors about the CAN-SLIM investing strategy. So the goal is really to identify the best educational material for you, so that way you don't have to go out and find it yourself. And this presentation is for educational purposes only. I'm not recommending any securities to buy or sell. Investing in stocks does carry substantial risk and you can lose your capital. I'm a non-professional volunteer investor, and the trademarks for Investors Business Daily, CAN-SLIM, and MarketSmith and Meetup are all listed there. So prerequisite, this video assumes that you're familiar with the CAN-SLIM investing strategy, which was developed by Investors Business Daily, actually by the founder, William J. O'Neill. And at a minimum, viewers should read this book, How to Make Money in Stocks by Bill O'Neill, before viewing this video. And the green book here is the latest version. If you haven't read it or you're not familiar with CAN-SLIM, you will certainly learn something from this, but some of the information might just be it might be hard to understand without having some foundation in CAN-SLIM. Here's the topics for this month. We'll look at the market dashboard as always, and then I'll continue the CAN-SLIM back to basics. We're on the letter I, which is for institutional demand, so we're almost done with that series. The last one we covered L for leader laggard. Then we'll do a market analysis. I'll talk about my current holdings just as examples, and then we'll go through a simulation for this year of Alibaba, which has been a pretty good stock this year. Okay, the market dashboard. This is just a bunch of indicators that I've compiled that I think give you some feel for what the overall market's doing and the overall market atmosphere. So the first one is the big picture. Investors Business Daily assigns one of three values at all times to the general market. Right now it's an uptrend under pressure, which I assign a yellow here. This just happened last week because we had one day where the averages sold off pretty significantly and in really heavy volume. So it was on a confirmed uptrend for quite a long time before this happened. But the market's still definitely in an overall uptrend, that's for sure. Uptrend health. So the best returns are generally made early on in a new uptrend. This uptrend's been going on for an incredibly long time. You can see here almost a year we're coming up on. And in the time I've been tracking this, I've never seen an uptrend last this long. And the Nasdaq's up 26% since this uptrend, since the market pulse went from a correction last time 23 days ago until today. So since this uptrend has been going on for such a long time, it gets a yellow here because we ideally want to get in to a new uptrend right, towards the beginning of it. Distribution days, these are days of where the general averages are trading down and in volume that's higher than the prior day. So right now there's 3 distribution days on each on the S&P 500 and the Nasdaq, and that's kind of a low to medium count, so that gets a yellow as well. And then the Federal Reserve activity. The Federal Reserve raised interest rates in December of last year, and then they just raised them in March, and they're expecting 2 more increases this year. Generally, when interest rates start to rise, it usually means that the market starts to underperform. Okay, doesn't mean it's going to happen here, but that's historically what happens. So since we're in an environment of rising interest rates, this gets a red. So overall here, we're okay. It's definitely okay to invest, but probably not a good idea to be investing in margin, and probably a good idea to have some of your account in cash. The next slide is these indicators can be found. This information actually you can see in the Investors Business Daily, the paper either the paper copy that they do once a week or in the electronic version called EIBD. And right now, the S&P 500 is trading above the 50-day moving average. It's up for the year 6%. So it's up quite a bit actually, given that we're not even halfway through the year yet. And IBD assigns something called an accumulation distribution rating, which tells you how much buying or selling basically is going on. And this goes A, B, C, D, E, with A being the best and E being the worst. So right now we're at a B, which is good. So that gets a green. Likewise for the NASDAQ, it's above the 50-day moving average. It's up about double the S&P 500 for the year. So this is shaping up to be a really good year for the NASDAQ. And the accumulation distribution rating is B+. So that gets a green. And then the IBD 50 is a composite index of the top 50 growth stocks as determined by IBD's screen that they use to develop the IBD 50, which they post on their website each day, and then you can find it in the paper once a week. So again, the IBD 50 is trading above its main moving averages, and it's up for the year. Actually, it's outperforming the NASDAQ for the year, so that's a good sign. And so those all get a green. And then these last three, these haven't changed since I've probably started doing these videos. The last bull market we had, we're currently in a bull market still, which started in March 2009 after the financial crisis. The really big gains in bull markets are made at the beginning. So considering this bull market's been going on longer than any one since at least 1970, and possibly could be coming up on one of the longest bull markets, like, without a correction ever. So that gets a yellow because we're still in a bull market, which is good, but it's been going on for a long time. So that tends to mean, the longer it goes, it tends to mean that stocks are making less meaningful gains. The last bear market we had was from the financial crisis, which was over 8 years ago now. So we're getting a red here because ideally the biggest gains are made after a major correction, and then the market starts turning around and going into an uptrend again. And NASDAQ intermediate corrections, these are small corrections in the 10% range, not classified as bear markets, but decent sized corrections I use the NASDAQ personally. You could use the S&P 500. But 9's a high number in the current bull market, so that gets a red. So overall, got a mix of green, red, and yellow. So I'm about 50% invested right now. I think it's okay to be buying stocks, but again, I probably wouldn't get too aggressive with buying on margin. And if you have a stock that reached your profit goal, definitely probably a good thing to take it. And even more importantly, if your stock is hitting if any of your stocks hit their stop loss, definitely get out, because the market right now is a little bit, the environment's a little bit riskier than we probably would like to have. Okay, so CanSlim, the past videos have been doing a series on these covering one letter each month. So this month we're going to cover the I. So CanSlim, first some background information. It's an acronym that was developed by William J. O'Neill, and it described his methodology of investing in growth stocks. And this month we're going to cover institutional demand. And this material that I'm going to share here, this isn't something I'm coming up with. This is from Chapter 8 of How to Make Money in Stocks by Bill O'Neill. That's the green book I showed at the beginning. So it takes big demand for a stock to push the prices higher. So individual investors like me and probably most of the people watching this video, we're not the ones that are moving the market. We're not the ones that are moving the price of a stock in general. So the big players are institutions, and that's banks and hedge funds, mutual funds, insurance companies. So they account for the lion's share of buying and selling in the stock market. And I've heard numbers anywhere from 75 to 80% of the market action is what they account for. So if you want to see a stock make a meaningful move, it needs to have some institutional backing and demand. Otherwise, it's probably just not going to go up that much. A stock should be owned by at least some institutions. So you got to think if Dreyfus and Fidelity and American and if these mutual fund managers who do this for a living and they have analysts who go out and scour the market for the best opportunities, if they're going to pass on a stock, then why would you want to buy it? Okay, because they have more information than we do, and they have full-time staff of people that do this stuff and look at industry trends and compare information from one company to another, and it's just going to be hard to get an edge on them. Now we do have an edge in the fact that we can get in and out of stocks much quicker than institutions can, but again, you generally want to, if institutions are interested in the stock and are starting to accumulate it, then that's a good sign, and that's where we want to kind of ride their coattails. Ideally, you want top performing mutual funds to own and continue to accumulate shares. Okay, and if you want to find out what is a strong mutual fund, you can look in EIBD. They have a section there about mutual funds where they rate mutual funds on a scale of A through E. And then they also have something called the IBD Mutual Fund Index. So let me show you what that looks like. Okay, this is a recent EIBD. So if we go to right here, there's a section in each paper called, I guess it's called Mutual Fund Performance. And in here you can see, you can look up mutual funds here. And right here, for example, for these Davis funds, you get a 36-month performance rating, A through E. Okay, A is the best. It'll tell you the performance for this year. It'll tell you the performance over the last quarter. It'll tell you the performance over the past 5 years. So you can get some information here about mutual fund ratings. The other thing you can get is there's something called, that IBD has called a mutual fund index. And I'll show you what that looks like here. On this page each week, actually this is posted each day under the big picture on their website. What's the market trend? Okay, and this is where I got the information earlier about the accumulation distribution ratings for the S&P 500 and the NASDAQ. So if you look at this, if you go down to their IBD Mutual Fund Index, you get a chart here. This is a composite of IBD's Mutual Fund Index. Okay, and if you want to look this chart up, they give you the ticker symbol right here, which that only works on investors.com and MarketSmith, but you can go look up at any time what this is doing. So when we say top-rated mutual funds, what I generally do is I look at this list right here, because this is a nice, concise list. It's 20 mutual funds. These are ones that IBD has determined are top mutual funds, either in terms of performance or their fund manager is a very savvy investor and generally outperforms the rest of fund managers. So if your stock that you're looking at is being accumulated or owned by some of these or a lot of these, then that's a very good sign. If none of these are owning your stock, then it's just a red flag you want to be aware of. Okay. So you also want to see increasing institutional demand, where the number of mutual funds that own shares of the stock is increasing with time. So if last quarter 100 mutual funds owned shares, this quarter we want to see more than 100. And the quarter after that we want to see more yet. So if that trend is increasing, then that's a good sign that funds are accumulating shares of that stock. One thing to be aware of is that when stocks top and start to decline, the number of funds that are accumulating shares can actually keep increasing for like a quarter after the top. That's something to be aware of, but in general, an increasing number of mutual funds owning shares is a good thing. IBD also publishes a quarterly mutual fund special report. Okay, let me show you that. We'll go back to the EIBD here. Okay, so this report, it may come out more than often than quarterly. I'm not sure really, but there's this IBD special report occasionally in the paper, and this sometimes these special reports have what's called new buys of top performing stock funds. Okay, so this tells us in the past quarter how many funds are buying these stocks. So Arista Networks here, 18 mutual funds bought shares of this stock in the past quarter. And this tells you the total amount invested. So 94 million was invested. So if you go through this and you look for the big numbers here, so NetEase is one that pops out here. You can see NetEase has, some of the most mutual fund sponsorship in terms of number of funds and dollars. And Applied Materials is another one. Well, guess what? Those are some of the stocks that have been doing really well for the year. Avago over here is a big one. IDEX Labs. So this is something else you can look at if you want to learn about which stocks are being accumulated by mutual funds, or if you want to see if a specific stock is how is the mutual fund following in the past quarter. Likewise, they tell you the top fund's latest sales. So you can see here, and you can actually compare how much buying is going on versus selling, because you'll see some same names here, like Avago is in both of these lists. Okay, so that's another way to gauge fund following, mutual fund sponsorship and demand. Okay, one caution Bill O'Neill gives in his book is that a stock can be over-owned by institutions and thus more risky to own. He doesn't really state how to determine this, but he implies that you do it by reading the chart. So if a chart is making an unsustainable move upward or a climactic type of a move, that's an indication that it's over-owned and there's too many people trying to buy it. And eventually they're gonna run out of buyers, and then the thing's just gonna come crashing down. If a stock's strong performance has become too obvious to everyone, okay, so like I just said, if there's no significant buyers left, then there's a higher risk of a sell-off. Another advantage of institutional demand is liquidity, and that means that you'll easily be able to sell shares when the time comes. Okay, so if you want to sell shares, that means somebody's got to buy them. There needs to be someone out there willing to buy them. Liquidity is defined as right here is defined as the average daily volume times the current price. So if a stock's trading at $100 a share, or if it's trading, if it's trading, let's say 1 million shares a day, and the current price is $10, 10 times 1 million is 10 million. Okay. Now, most top traders like to have at least 40 million in daily liquidity. And generally the higher the better. Higher liquidity means the easier it's going to be to buy and sell shares when you want to. Okay. Lower liquidity stocks tend to be more volatile, and then it's going to be harder to get rid of shares when you want to. Okay, so this is an excerpt I've been using since the beginning of this series on CanSlim. This is Gigamon, and let's look at where we can find the I in these mini charts that are in Investors Business Daily. So one way that you can find this is the up-down volume ratio here. Okay, anything above 1 means that there's more volume on the upside than on the downside. There's more buying volume than selling volume, in other words. Okay, which does indicate that there's institutions are accumulating shares. The accumulation distribution rating here, which goes on a scale of A to E, okay, A plus here means that there's a lot of accumulation going on, which again implies a lot of institutional demand. going back to our talk on liquidity, if you want to calculate liquidity, here's your average daily volume, and here's your current price. So if we did 55, let's say, times, let's just round to a million, 55 million, that's greater than 40 million, so that's good. And that's about it here on the mini chart. There's not a ton of information on the mini chart as far as gauging institutional demand, but I'll show you some ways to get more. Okay, you can find it also in the IBD stock checkup. So let me log in to investors.com and I'll show you what that looks like. Okay, I apologize. I'm not able to sign into investors.com for some reason. So I have an old stock checkup here that I saved from Palo Alto Networks from 2015. So let's look at this. I'll show you how to find the institutional demand in here. Okay, so if you go to the very end, there's supply and demand. And right here, you can see again the accumulation distribution rating. That's A through E, A being the best, E being the worst. Up-down volume ratio, which I talked about earlier in the mini chart. You can also find that here. Here's a couple things that you won't find in the mini chart. The percent change of funds owning stock. So this means that, I believe this means in the past quarter, there's a 7% increase in the number of funds that own the stock. So obviously a positive number here is good. A negative number means less funds own it now than did previously. Also, you get the quarters of increasing fund ownership. So 8 is quite a bit here, but you never know. Some of these stocks can keep going for years and years, but you just want to see a positive number here, okay? And I like to see at least a couple, at least 2 or 3. I think 2 or 3 is ideal. As this number keeps going up and up, eventually there's potentially it's gonna just be over-owned. But this shows that this stock's been, it's had 8 quarters to 2 years of increasing fund ownership. So there's a lot of institutional demand for this stock. Okay, in MarketSmith, here's a screenshot from MarketSmith, and I'll show you here. If you want to find institutional sponsorship on here, they give you even more information here, the number of funds right here. So, I didn't draw that very well. So this shows you that there was 262 funds that owned shares at the end of this quarter. Then it went to 273, then 305. So we had 3 quarters of increasing, okay, and that's good. Now the most recent quarter, 299, is slightly down from the last, but not by much. It's basically unchanged. So overall, this is a good trend, okay? And this information, I'm not aware of anywhere to get this other than MarketSmith. And I don't know how they find out what funds are buying or selling shares of these stocks. I don't know if they scour through the fund's prospectus or they have some other way of getting it, but this is pretty cool information to have so available, so readily available right here. Okay, so that concludes the CanSlim part of this presentation. If you don't have Bill O'Neill's book, you can also learn about CanSlim on investors.com. And if you go to the How to Invest section here, you'll get this menu here. And then if you go to the CanSlim investing system, you'll get the full, it'll give you actually over here CanSlim, and you can just click on the I, which is slightly hidden here. But you can click on that, and it'll give you a lot of the same information that I just provided. Okay, so the next part of the presentation, I'm going to do a quick market analysis and then talk about current holdings, and then we'll do an Alibaba simulation. So I'm going to pause this and switch over to MarketSmith. Okay, let's go into a market analysis here. First, we'll start off with the NASDAQ. So this is a monthly chart of the NASDAQ, and you can see here this trend line that I drew way back here. This was starting at the bottom of the financial crisis, and you can see it was broken last year, the uptrend looked like it was losing a little bit of steam. We had a couple sharper corrections here. These were both about 20%. And then we had, but then after that, we kind of went sideways right around that prior high from this prior high was from the technology boom in March 2000. And you can see since then, since November, the Trump election was a huge catalyst for the market to perform the way it has this year. You can see we've got 1, 2, 3, 4, 5, 6, 7 straight up months as it's shaping up right now. And a couple of those were in heavier volume. But you can see that mostly these finished at the top of the monthly range too. And right now we're right around the 6,000 mark. It did go above that, which I'll show on the weekly chart. But overall, this uptrend's been going on for a long time, and I really thought back in here that we were going to potentially go into a bear market, and then the Trump election has just been a huge, like I said, a huge catalyst for the market to go higher. So for right now, we're still in an uptrend. In fact, if we go back here, it would be totally fine to draw a new trend line like this. And in fact, I'm going to do that later, but to keep an eye on this trend line as a longer term uptrend line. All right, here's the weekly chart. So I mentioned we had this big move here. This only goes back to 2012 on the weekly, but I mark anywhere here. I mark the size of the corrections. Okay, and you can see we had a couple big corrections, pretty big corrections back in 2015 and 2016. But excuse me, since here, since February of last year, we've really been in a pretty solid uptrend without any major pullbacks. No pullbacks greater than 5%, I believe. No, I believe that's true. And you can see we're following a nice uptrend line. We had a prior resistance level here that we broke through back in November, again around the time of the election. And you can see it just keeps on trucking higher. So eventually, inevitably, there will be some sort of pullback, whether it's 5%, 10%, 20%, nobody knows. But for right now, we're in a very solid uptrend, and the market's doing well. Another thing is that here I marked the Trump election, by the way, so you can see when that started. But another thing I want to mention is the rate hikes by the Federal Reserve, and I marked one right here and one right here. And you can see neither of those has really caused anything negative to happen. Maybe, here we went sideways for a while, and then we went higher. This one really didn't cause anything. This is basically sideways up in here. And you can see that the market moved out of. We had a kind of a consolidation here. If you were to, you could actually draw like a box around this. It's consolidation area. The market on April 24th gapped up out of here, and I thought we would hit some resistance at the 6,000 mark, but you can see it went right through the 6,000 mark with no problem, and then it's coming back now and finding support at the 6,000 mark. So again, the market it just keeps on going. It's looking strong, and it's not a time where we're coming out of a correction, which is when you tend to see the bigger gains. So there's not a lot of stocks that are making huge gains this year, but there's certainly stocks that are making 25% profits or greater. And based on this chart action here, it's no problem to be invested right now. Okay, we look at the S&P 500, we'll see something very similar. We had a long uptrend here, and then we had another one that I could draw over here, and very similar to the NASDAQ. We had a down month here, and this month is shaping up to be down, but just barely. So it's not as strong as the NASDAQ, but it's still good. Go to the weekly chart. Again, we see similar action. We see this, we had kind of a double bottom back in here, and on all the indices, okay, which we broke out of, and then since broke into new highs here. One thing interesting on this is that a couple days before the election, or the week before the election, this pulled into the 200-day moving average, as you'll see right here, and boom, it bounced right off of it here a couple days before the election, and then the day of the election, it broke through the 50-day, and it hasn't looked back really since. It's had a couple days here, traded below the 50-day for a week or two here, and we did have this day here last week, which put the market, we were in a confirmed uptrend, and we went to an uptrend under pressure. But you can see this gap down day. It's a wide bar day. It sliced through the 50-day and above average volume. It closed at the bottom of the range. So that was a pretty ominous day. But since then, it's retaken the 50-day in even heavier volume, and everything looks good on this one too. Not quite as strong as the Nasdaq. What you really want to see here is this rally above this 2400 mark. You can see that we've had some resistance around this area. So if it can move decisively above this 2400 mark, that'll be a really positive sign. We look at the Russell, we'll just look at the daily chart. The Russell had a really powerful move here out of the election. It was the strongest mover here out of the election. But since then, it's basically, you can see here, if you look right here, it's basically been going sideways since December. And so that's not good. And you can see the relative strength is tapering off here, meaning that it's underperforming the S&P 500. And normally smaller cap stocks tend to outperform. So we're in kind of a weird time where bank stocks were doing really well in here, and we did have a period of sideways action even in the Nasdaq that I'll show here. You can see we did have from about here, about February through April, we did have some sideways action here. But it turns out that looks like, that was just setting up to make a move higher, which it did, and it's doing right now. And the last thing we'll look at is the IBD 50. This is a composite of the top 50 growth stocks according to IBD's computer screen. And you can see, again, been trading pretty much above the 50-day for quite a while, and clearly in an uptrend. And if we look at the weekly chart, same thing. We're seeing nice uptrend here. One thing is that the relative strength of this is not great. You can see going back to even March 2015, pretty much been going sideways here. So it would be nice to see this start to come up and show some strength, that these growth stocks are outperforming the S&P 500. Like back in this area here, this is a time when you can really make some nice gains. You can see that growth stocks for this year have generally been kind of performing on the same level as the S&P 500. Ideally, you want to see them outperforming. So that's that. So let's go into a simulation of Alibaba. Okay, so let's go back in time here. I'm going back to the end of February 20th of this year. And let's go look at the EIBD from February 20th. If you look here, if you were going through the IBD 50 and looking for stocks to put on your watch list, what I go through is I go through here and I look at these mini charts first, and I see which ones appear to be in buy range or appear to be forming a base. And if you do that, you can even use their notes here, and you can see this one's in buy range, but it cleared the base entry there. This one's extended, so don't even, no need to look at that one. This one is extended. This one's extended. This one's within buy range, but it looks like it's already moved out of the above the buy point. So if we keep doing this and we go down here, you'll see Mobileye right here in buy range from a couple with handle buy point. just above a cup with handle. So those are ones that I see that and I'll write, I'll then take a look at the fundamentals, either using the mini chart or using this information over here. And if you go here, you will see Alibaba says forging a cup with handle base with a 104.67 entry. So these are the ones that I really zone in on, the ones that say that they are forming a base. They're currently in a base and they're forming a base. And what I'll do is I'll see this here and I can see the base here. I can see the cup with handle. And then I'll go over to here and I'll look at the numbers. Okay. Now you have to go up top here to see these. We've got EPS, relative strength, and then I really look at these four. These are the percent changes of earnings and sales. Okay. And you can see Alibaba's got high numbers here. The relative strength line is a little bit lower at 72, but when a stock's forming a base, that's kind of common. And you can see we've got 32% earnings growth, 30%, 51, and 44% sales growth. And then over here we've got pre-tax margin and return on equity. And these I like to see total 50 or more. And this total is 76. So that's great. And these numbers are all good. These are all above 25%. It's not as strong as some others like Momo here. Momo, you can see, is really, really strong, has really powerful earnings and sales growth. And Momo, in fact, is extended here, so I wouldn't consider buying it. So Alibaba looks pretty good here. And we're not going to go look at all these stocks. We're just looking at one. So let's say you wanted to learn more about Alibaba. Let's go to the mini chart. Okay, so it's number 49 on the IBD 50. So these stocks, IBD does rate them that number 1 is better than number 2, and so on. But this basically means that they're saying this is in the top 50 of all stocks that are trading out there. And that's great. You can see we've got the group rank is 86 out of 197. So the group isn't great, but it's about average. The share price is $100, and we've got the average, where's the average daily volume, is 10 million. So 10 million times 100 is what, 10 billion in daily liquidity. So this thing has huge liquidity. You're going to be hard pressed to find one with more liquidity than that, unless you look at like Facebook or Google, Netflix, something like that. And you can see the other ratings here. We've got a 93 composite rating, 97 earnings per share rating, 72 relative strength. We've got 22% annual earnings growth. That's good. 25 or more is even better, but 22 is good. They have no debt, which is good, especially in a rising interest rate environment. Their last quarter earnings per share, they reported, was up 30% from the same quarter the year prior. And they did revise the estimate a little lower. And then the quarter prior to that was up 39% from the year prior. So the earnings per share growth is not accelerating, but it's solid and it looks pretty consistent. And we'll look at it more on the MarketSmith. And then we have 3 quarters where earnings per share is up 15% or more. Okay, so that's good. That shows we've got pretty consistent results here. Earnings aren't due until May 3rd. So earnings aren't due for another 2.5 months, which is great because earnings season can present a lot of volatility and can really cause cause you have to make a lot of decisions. So not having to worry about that here is great. The other thing I notice on this mini chart is that as the stock comes down here, as it forms this little correction and bottoms out, you can see that volume is tapering down here. Okay, so that's good. It looks like volume is generally drying out near the bottom, which is great. And then you can see it broke up through the 50-day here. We've got a heavy volume week here. That was probably an earnings report, actually. So that caused the stock to move up for the week in heavy volume. And now we're trading sideways, and you can see volume's quieted down. So this is a pretty textbook cup with handle look here. Okay, so this looks pretty good. This is definitely worth looking at further. So if we go back to MarketSmith, so Alibaba is a fairly recent IPO, a few years old. It formed an IPO base, and it broke out and did well for a couple weeks before failing and having this pretty massive correction here. And then you can see it had a run up here, and then it had another sharp pullback. And then since it broke out of this at 86, it went up to 109. So that's about a 25 or so percent return or increase. So from here to here, this thing made a pretty nice move. Then it's pulling back and forming this cup with handle. And it made a decent move here. It had this long consolidation period. This was 40 weeks. Okay, so this is almost a year. And then it broke higher, and now it's consolidating again. And this is a pretty long cup with handle, 21 weeks. And it's a second stage base, which is good. We like to buy first or second stage bases. And it you can see that it found support around the 40-week moving average. So it traded below it for 1 week. Volume was really quiet this week, and boom, it went higher right here. So if you look at these weekly bars throughout the base, there's only a couple of tall red bars here, which formed on the left side, and then you can see as the right side's forming, we had one tall blue bar here, and then we've got pretty quiet volume here as this is trading sideways, forming this handle. So on the weekly chart, this looks good, and there's a little bit. If you look here, this peaked around 110. There is a little bit of overhead resistance here where the stock traded above 110, but this was 2 to 3 years ago, so I would say that's pretty invalid at this point. There potentially are still people who bought it here that are going to sell into strength if it moves back up here, but I wouldn't expect that to be many people considering it was so long ago. The relative strength line here, as the stock formed the base, the relative strength line is kind of following what the stock action is, but you can see it's moving back up here as the stock is completing this base. It's not near a new high, but it's moving up, and if this thing does break out, it's gonna potentially get up towards a new 52-week high at least. It won't reach this high back here, but it'll potentially do a new 52-week high. Okay, so on the daily chart, here's what the cup with handle looks like. And this day here, I'm guessing we had an earnings report in there. Yeah, January 24th, we had an earnings report. So right here, we had a heavy volume gap up on the earnings report. And one interesting thing here is how this gapped up above 100, and then you can see how afterwards, see how it found support. The low for the day was basically 100, and then as the stock's moving sideways here, it's holding that 100 level. So these round numbers, especially these numbers like 100, 200, 300, this is called a century mark. 100 is what Jesse Livermore called it, and stocks do tend to either hit resistance there or find support there. And there's an old saying that if a stock goes above 100, that it will go to 110, which just means that if it breaks through that resistance at 100, it's likely to keep going higher. Okay, it's not guaranteed. So another thing to notice here is that this stock had this gap up day here on heavy volume when it closed at the top, and it retook the 50-day, and you can see that it didn't meander around the 50-day, it just kept going higher. So this stock right here is within buy range. Okay, it would be totally fine to actually buy it right now as an early buy point on the basis of it breaking this 100 mark, and on the basis of it trading sideways in low volume. You can see this day back here is potentially the lowest volume day on the chart, one of the lowest volume days. So this thing is totally buyable right here, and you could take partial position here and then take the rest of your position as it breaks out of this cup with handle, or you could use the sloping trend line that I drew here. And the nice thing is that if this does break out and move above this 109.87 mark, this would be a spot you could consider adding to your position if it makes a new high. All right, so we're going to step through this, and what I'm going to do is I'm going to draw in red lines here. So let's just say we found the stock here, and we're gonna buy. I don't know if I can get this to work. Let's try the pointer. Okay, we'll do that. So let's say that we're gonna buy the stock there. We're gonna buy a half a position right there. So if we're taking a $10,000 position, we'll buy 5,000 of it right here. If you did that, you could set your stop to basically be 100 because we know that the stock's finding support at 100, and if it breaks support at 100, it's likely that something's wrong and it's going to keep going lower. So you could set a very tight stop on this thing if you bought it this day. You could set really a 1 or 2% stop if you really wanted to. Another option would be to use this right here, 98, as your stop. And let's see how far it is from the 50-day moving average. It's 5% from the 50-day moving average, this red line here. So that would even be okay. So let's, for simplicity's sake, say we're going to use the 50-day moving average. That would be a 5% loss. And as the stock's been moving up, this line's going to keep moving up. So this 5% is going to get, if the stock trades sideways, that 5% is going to get less and less. Meaning we would be taking a lesser loss if we did have to sell for a loss. Sorry about that. All right, so we're just going to step through this now. Let's say we bought half our position that day. What's going on here? Okay, I don't know why this isn't letting me click. Okay, we'll do it this way. Okay, there we go. All right, so we're just going to step through this one day at a time here. So this day, no action, nothing really. This day here, the stock traded above the buy point intraday, but it closed below it. So it would have been totally okay to have a limit order in place that if the stock broke above 104.57 that it would get bought automatically. And you can see volume's heavy for the day. So this is actually, given that this volume is heavier than any day in the prior couple weeks, actually makes this viable as a pocket pivot. If you want to learn about that, go to Gil Morales and Chris Catcher's book, which is called Trade Like an O'Neill Disciple. So let's say, for the sake of this simulation, that we're going to buy the rest of our position right there. Okay, so we've now got 50% here, 50% here. We've got a full position. And let's say that for both of those, we're going to use a those funky little things on my chart. Okay. Let's say that for both of those buys, we're going to use the 50-day moving average. Okay. Right here, you can see we're 8.3% above the 50-day right now. So it's a little bit of a big stop loss for this second buy here. It's not so much for this one. So you could also even use the 50-day as your stop for this first buy and use the 100 mark as your stop for this guy, and that would be about a 4% loss, 4 to 5% for each. But let's for simulation, for ease of the simulation, let's assume we're going to use this 50-day moving average, the red line, for both of our stops. Okay. So let's keep going. So now there's really nothing for us to do with this except if it keeps trading sideways for a long time, then we're going to have to consider what to do. But if it breaks the 50-day moving average, we're going to have to think about selling it at a loss. Otherwise, as it goes up, we're going to target a 25% profit from this 104.57 point. Okay, so that's going to be 130.71 is going to be our profit goal. Okay, so let's say we do nothing else except we're going to say if it goes to the 131, we're going to sell it. If it breaks the 50-day, we're going to sell it, and we're going to do nothing else. Okay, so let's just step through this one day at a time. All right, basically we're going sideways right now. Nothing much going on here. Nothing to do except hold it. Okay, it's getting close again to the buy point. But again, you can see it's just basically trading sideways. The trading in here is pretty tight and volume's pretty low, especially these last few days. So that's a good sign. That means usually it's gonna break to the high. It's gonna break up or down, one of the two, and that's gonna tell you the direction. Okay, still going sideways here. Still going sideways. Nothing to do here. Volume now is getting really quiet these past few days here. Nothing to do here. Okay, so here we have a pretty solid breakout. This day closed above this 104.57 buy point. Volume was above average. Volume was even higher than this day when we filled our the other half of our position. And this day is also a pocket pivot. So if you really wanted to, you could make an add-on buy point here, or an add-on buy, but we're not going to do that until the stock moves up a little bit from the other two places where we bought it. So why I have these little red marks all over my chart here. Get rid of these. Okay. So let's keep going. So the next thing we're going to be looking for is, again, we're still looking. We want to see if the stock, if it breaks the 50-day moving average, that red line, then we're going to need to think about selling it to protect ourselves from a big loss. If it keeps going up, then we need to think about at what point do we want to consider adding to this position. Okay, since our last buy was this day here around 104, I like to give about 5% at least before I would think about buying more. So if we take 104 and add 5%, that's 109. Okay, well, that just happens to be right around the left side high of the base. So let's say if this thing breaks above around 110, we'll consider adding to the position. Okay, so let's keep an eye out for that. So let's just step through this one day at a time here. There's really nothing to do here except just sit tight. Okay, it's not in danger of breaching the 50-day. If anything, it's moving up closer to the 110 mark. Okay, but again, there's really nothing to do here. We're just going to keep holding this thing. All right, now this day, we're starting to get closer. You can see we're getting closer to making a new high, at least in the 52, at least in the sense of what's shown on this chart, which is the past 18 months. All right, so if that happens, we're going to think about adding to this thing. Okay. Okay, nothing to do there. Nothing to do there. Nothing to do there. Okay, so this day here, the stock is getting very close to making a new high. Okay. Nothing to do here. Another thing we'll watch for is pullbacks. If this thing pulls back for a couple weeks and then moves into a new high, that's a good place to add to the position as well. Okay, so it is pulling back a little bit here. We could use this high here. This thing did make a new high intraday, although you can see that it reversed and closed lower. So at this point, let's say if this thing makes a new high above here, 110.45, after this little pullback, then we're going to add to it. Okay, and there we are. So this day here is, you can see volume was heavier than anything in the past couple weeks. It bounced off the 10-day moving average. It decisively moved above 110. So let's make an add-on buy right here. And the amount to add to this, if you did 5,000, 5,000 here, then you want to pick, you want to have a strategy for how much you're going to add. A lot of people say to add anywhere from 10 to 20%. So if you had 5,000, 5,000, that's 10,000 bucks. You could add about another 2,000 bucks worth of stock here. Okay, or you could take 20% of the number of shares that you own. Okay, there's different ways to do that. It's kind of up to you. All right, so we added to it now. So now again we're gonna watch, and you can see how far are we from the 10-day moving average. We're 5.5%. So we can still use that as our stop for all three of these purchases. All right. So now there's nothing to do except sit tight here and wait. We've got about another month until our earnings report. Okay, so we're just going to keep stepping along here. And this thing's just moving up nicely. There's really nothing to do here except sit and enjoy the ride. This day we've got a gap up day in above average volume. Okay, so this is looking strong. Yeah, nothing really to do here. We're just watching it. It's trading pretty tightly. You can see this thing's just moving up nice and steady. It's not going up like crazy. We're not going to make $1 million overnight with this thing unless you bought a ton of it. But we're sitting tight here. It's been how many weeks since here? It's been 10 weeks. This is trading days, not calendar days. It's been 10 weeks and the thing's up 13%. So yeah, nothing really to do here except sit tight, and it's in no danger of breaching the 50-day here. Now we do have an earnings report coming up here. Let me just see here. Okay, 5/18. So May 18th is an earnings report. Okay. Okay, so this is interesting. If we go on a weekly chart now, the prior high for the stock, the all-time high was 120. Okay, so that would be an okay spot to consider adding to the stock again. Okay, our last buy was right here around 109, so we've got about 10% from that. So we're not making these add-on buys too close together, and we actually could make an add-on buy this day because this day is a pocket pivot. It's a gap up. It's very close to a new all-time high. We had a very short pullback here, and it made it making a new high. However, this day is only about a week away from the earnings report, so it's a little bit riskier to make a purchase that close to the earnings report. So that's 5/9. The earnings report is the 18th, so a little more than a week. You could make an add-on buy here if you really wanted to, or you could wait for it to go above 120. But let's just say that we're going to take the conservative route here, and we're not going to buy anything else until the earnings report. Okay, and you can see this thing's hovering right around the new high there, and then this day it does break out into a new high. But this day now we're only 3 days away from the earnings report. Okay, so I wouldn't recommend buying more of anything that close to an earnings report. Okay, look at this day now. We've got that's the 16th. Stock is up 2% in huge volume, some of the heaviest volume in months. It's broken out of that prior high at 120, and now we're up 19% from this pivot point back here. So this is great. Okay, and we've got a very nice profit cushion. If we bought this thing back here at 100 and 104, that means our average cost is about 102 plus whatever we bought here. So let's say our average cost is 105. We've got a 19% profit cushion. So we can absolutely hold this thing through the earnings report. Even if it has a really bad earnings report and gaps down 10%, we're still going to have a nice profit. All right, so let's say we're going to hold this thing, and the earnings report is the next day now. So it's good to, I think, on an earnings report, wait till the end of the day before making any decisions, unless the stock is making, unless it has like a huge move down and breaks all kinds of support. So let's see what happens on the earnings report. Okay, so what happened this day is that the stock opened down here, and then you can see it never got close to breaching the 50-day, which is our stop, but you can see that there were a lot of sellers early on in the day, and then people came in and bought the shares and bid the price back up just above the prior day. So this is a huge support day, and this is great. This is great to see. And if we and we would still own this, obviously. So this day, given that this was such a positive reversal day, it bounced. It got relatively close to the 50-day for the first time since this breakout, and it closed above the 10-day in really heavy volume. That makes us a pocket pivot as well, as far as I'm concerned. So let's say this day is actually a day we can add more to this position. So let's make a second add-on buy point, right? Second add-on buy right here. All right, and this is why it's good to wait till the end of the day on an earnings report, because if you were early on in the day, you might have panicked and be thinking about selling this, which would have happened right at the low of the day. And let's see, this was not long ago, so I think I can get, let's see if I can get a 5-minute chart. Okay, so that was the 18th, so we only got one more day of trading shown here. And that day you can see, now we're back to this is a current chart. You can see that the stock gapped up this day, made a new high, reversed lower and did close lower, but it's still up for the day, up 1.5% from the prior day. So let's look on the day of the earnings report, which was this day right here. You can see from the prior day we had this gap down, and in the first 5 minutes you could really be thinking about panicking and making some type of a decision here. And it's good to wait out that first hour or so of trading, because things tend to settle down, and after an earnings report especially, you can get a lot of volatility. So you can see we had, this thing was down the first 5 minutes, and we're thinking, oh boy, this is terrible. Well, look how much it rallies to the next bar, and then it starts moving up. It starts moving up, comes back down, and then it starts moving up for the rest of the day. So if we were to check in here around 3 o'clock, we would see that this thing is about, actually a little bit above the prior day's close. This gap got filled around 2:30. So now, it's time to start thinking about adding to this thing, which is what we're showing here. Okay, and the 25% profit goal is up here. I said it's around 130, 131. It's actually this arrow here, and it's also shown by the top of this green area. So right now there's nothing to do with this thing. Hold it and watch for a breach of the 50-day moving average, or watch for it to break above the reach the profit goal and take a really nice profit on this. So that's the end of this simulation. And disclaimer, I do own this stock, and I don't know if these are the exact days I bought this thing and added to it, but this is really close to what I did and what I have right now. So this has been a really nice trade for the year. Okay. Current holdings. These are the stocks I'm holding right now. Alibaba, we just went through a simulation. let's go back and look at NVIDIA and Avago, and then we'll conclude this. Okay, NVIDIA. So this stock last year was a big time winner. Made this huge move here, and it formed a climax top back here. And I really thought this thing was going to tank. I thought this thing was going to come down like 50% or more. And I actually did short this thing a couple times without success. But what happened here, this thing formed this top here, came up, tested it, failed, and then look, it basically now has been trading sideways in this area for quite some time, since December 2016, so about 6 months. Well, lo and behold, this thing had an earnings report last week, and look what happens. Gap up, huge volume, and closes at the top of the day, closes above this buy point. So this just goes to show you how quickly you have to be willing to change your mind about a stock, because I thought this thing was going to tank back in here. I thought this was a great short opportunity, and look what happens. It trades in a relatively tight range here for 6 months, and now it looks like it's ready to move higher. So I changed my mind on this one quickly, and I had it on my watch list this week leading up to the earnings report, and I did buy it this day, and I bought more of it this day. And you can see it just made this really powerful move out of here, and relative strength is kicking up nicely, and volume is just awesome this past 2 weeks. So this looks like this thing's going to be a really nice trade, and potentially be another leader for 2017, just as it was in 2016. And the other stock that I own right now is Avago. Avago's been a leader in the semiconductor space for quite a while now, and it formed a base here, a second stage base, and I was watching it back here with this trend line, but I didn't have buying power. I had a full portfolio, so I didn't buy it, but I did buy it when it broke out of this base, and I don't remember if I bought all my position one day or 2 days, but anyways, this thing moved up, and you can see it's holding above the buy point here, and this one's a pretty steady mover, kind of like Alibaba. It doesn't move a ton. NVIDIA certainly has a little more volatility, but this is looking good for right now. Okay, and then we already went through the Alibaba simulation. I hope you enjoyed that one. So if you found this video on YouTube and you're not a member of the Meetup group, then you can join by following the below link. You do need a free Meetup account, which takes a few minutes to set up. And I need to update this slide because I actually don't post these files on the Meetup page anymore because Meetup doesn't allow it. But if you do join the Meetup group, you will be notified when new videos are available. You could also subscribe to the YouTube channel and get notifications as well. There were no questions from the past month from any of our members. And in conclusion, next month the next video, which I'm doing these every other month, we'll cover the M in CanSlim and wrap up that session. If you have any questions or suggestions for topics, please message me on Meetup, and I answer all those messages. So I hope you enjoyed this video. Thank you, and see you in 2 months.